Now, Capitec's profit continues to climb, with the lender now banking about a third of the country's population. There's been a 15% rise in headline earnings, but there is a concern emerging from its latest annual results that show clients are struggling to pay back loans. Well, Capitec CEO Gerrie Fourie joins us now. Gerrie, thanks very much for your time. So, I mean, in such a tight environment, you did see a jump in your annual profits. What was it that drove this? I mean, are more people transacting? Is it the earnings that we got from higher interest rates that ultimately helped the bank? Or was it a lower base that this came off? What's the drive of the profits this afternoon?
Yeah, I think if you look at the driver of the profits, the first thing is we've grown our client base of another 2 million clients. So we're now up to 20 million clients. I think if you look at our insurance side, it's done exceptionally well. Our funeral has grown with 56%. Our credit side has grown with 21%. Our transactional side has grown with 9-10%. And then our OPEX was down 5%. So it's a combination of things that has brought it, that has brought the 15%. It's coming from a normal base last year from a profit point of view. I think what is also important is that we've given back over 800 million to clients with our Live Better and reducing pricing on certain of our components. And then we've invested about 1.4 billion in the future in our business banking, insurance, cloud technology, Connect, etc. So I think overall we're quite happy with the results.
Yeah, but the market wasn't very happy, though. I mean, the Capitec share price down 5% on the day. Has this got to do with the fact that, I mean, as the results suggest, consumers are struggling to pay back loans? That's a concerning feature, though, isn't it?
Yeah, I think if you look at the pressure on the consumer, for sure there's pressure, and we've seen it. But, you know, we all look at interest rates and say interest rates has increased by 4-5% this year. But if you compare it to pre-COVID, we only 1.5% higher. The same with inflation. I think the biggest thing is still the unemployment is there. You know, unemployment before COVID was about 23-24%. Now it's 32%. And definitely what we're seeing is companies has cut back on overtime and bonuses. And the increases in salaries has been below inflation. So I think a combination of all of that has actually put pressure on the client.
And you see this on the ground, don't you, Gerrie? Because it's interesting you're mentioning today that high inflation, particularly with groceries, is eating away at that disposable income. I mean, just to go back to that impairments, 80% spike in impairments to 6.3 billion rand. You're kind of seeing what, you know, this high inflationary environment, as particularly, as I said again, with groceries, is doing to the average client.
Yeah, I think that 80% is a little bit, let me put it in perspective. If I look at 2020, our impairments was about 4.2, 4.3 billion. Yeah. Then it went to a very high 7.5, 7.6 billion in 21. Then we had a very abnormal low year in 22 of just over 3 billion. And now a normal 6.3, 6.4 billion for this year. So it's a little bit misleading if you compare a very low year with this particular year. If you look at the impairments over a 4-year period, it grown with 12%. If I look at our loan base, it grew with 9%. So it's 3% higher. But then our provisioning has increased from 20% to 23%. I think that gives you a much better perspective than to say 80%. So I think that clarifies it better.
Yeah, okay, so we're at stage 6 power cuts. I mean, 2 questions in this regard. Firstly, how's that impacted on the bank in terms of its operations? And secondly, again, I'm going to throw it back to your client base because they're taking a very huge impact on this.
Yeah, I think on ourselves, we've spent close to 200 million on making certain our branches is operational. Unfortunately, all branches was probably only here by January, February. So a certain portion of our branches and ATMs weren't operational when there was load shedding. It's interesting if I look at our small businesses, how resilient they are. I think everyone has realized they had to do something themselves and then invest in generators and lithium batteries, etc., etc. The problem with that is your OPEX is increasing with, let's say, 5 to 10%, but they are resilient. I think the client itself What we've seen in, for example, prepaid electricity, that has dropped quite a lot. So people are not buying prepaid electricity, and we've seen, for example, takeaways, that has increased tremendously, or restaurants has increased tremendously. So it's quite interesting if you go and look at all the different facets, how it's moving with load shedding.
Yeah, I mean, just as we round up, Gerrie, I mean, based on that last answer then, just looking forward, looking at the fact that we are expecting, 0.1% in growth this year by many of the analysts. And I mean, ultimately, when you want to know about a growth of an economy, you look at a bank to see what the clients are experiencing. What's your forecast with that rather gloom picture on where we are with growth coming up, particularly given the power cuts?
Well, if you look at what's happening worldwide, everyone is expecting that inflation will start dropping, and we've seen now with America dropping from 7% to 5%. We've also seen similar trends in the UK. Everyone is expecting that inflation in the third quarter of this year will, let's call it, go to lower figures. One must remember that China was actually locked down until about 2 months ago, and that whole supply chain is only now starting to be operational. So the effect of that is that interest rates won't increase that much. It will probably stay very stable. I think that's what we've done, is to make certain that we can diversify, and that's why we have invested quite into our business banking venture. We've invested in Insure, we've invested in Capitec Connect, we've invested in value-added products and in Live Better, to make certain that we are diversified but that we offer value to our clients.
All right, I'm going to leave it there. Gerrie Fourie, CEO of Capitec, thanks very much indeed for talking to us. All right, quick look.